All right, so think about this for a second. How does a business deal with a massive, maybe six-figure insurance bill without totally blowing up its budget? Well, today, we're going to pull back the curtain on a really powerful but kind of under-the-radar financial tool that makes it all possible. It's called insurance premium financing. Okay, so here's how we're going to break this down. We'll kick things off with a pretty surprising real-world example. Then we'll get into the nitty-gritty of what premium financing actually is, how the mechanics of it work, who really benefits from it, and then, what it all means for the bigger financial world out there.
So our story actually starts with a credit union. Yeah, a not-for-profit institution called Trulient Federal Credit Union. And they recently made this super strategic move, a move that really puts a spotlight on this little corner of the financial universe.
And just so you know, Trulient is not some small, local shop. We're talking about a major, member-owned credit union. They've got a long history of helping their members and their communities hit their financial goals.
And this quote from their CEO, Todd Hall, really tells you everything you need to know. It shows you've got a leadership team that's all about adapting, moving with the winds of change. And, well, that is exactly what they did.
And this right here? This just goes to show how serious they are about supporting businesses. I mean, they didn't just become a local player. They became the #1 credit union in the entire country for a key type of small business loan. That's a big deal.
Okay, so what was this big strategic move we've been talking about? Well, in 2024, they went out and acquired a company called P1 Finance. And P1 operates in this very specific, very interesting niche, insurance premium financing.
Right. So that brings us to the million-dollar question, doesn't it? Why would a leading credit union, one that's at the top of its game, want to jump into this specific business? I mean, what is this business they just got into? What exactly is premium financing, and what problem is it solving that makes it so valuable?
Okay, so at its core, it's basically a specialized loan. Let's say a business needs, $1 million in liability coverage. The insurance company wants that whole premium paid up front. That's a huge chunk of cash. So a premium finance company swoops in, pays that massive bill for them, and then lets the business pay them back in these manageable monthly chunks.
And you can really see the massive difference it makes right here. I mean, paying a lump sum, that can absolutely cripple a company's cash flow. It ties up all this working capital that they could be using for, hiring people, buying inventory, expanding the business. But financing, that completely changes the game. It turns that one giant, painful hit into these predictable monthly payments. And that frees up all that vital cash to actually fuel growth.
So you might be thinking, all right, this sounds a little complicated. But honestly, the way it works is, well, it's actually pretty elegant and surprisingly simple when you break it down.
The whole thing really just boils down to these 3 simple steps. First, the lender pays the insurance company. Easy. Second, the business pays the lender back over time, with interest, of course. And then, step 3, and this is the really clever part, the insurance policy itself is the collateral for the loan.
Okay, but wait, how can an insurance policy be collateral? Well, the secret sauce here is a concept called unearned premium. Think of it like this. If you pay for a full year of your car insurance, but you cancel it after just 6 months, the insurance company has to refund you for the 6 months of coverage you paid for but didn't use. That refund, that's the unearned premium. And this is what's so crucial. The business doesn't have to put up its building or its expensive equipment as collateral. Nope, if they stop paying the loan, the finance company just cancels the policy. And what happens next? The insurance carrier sends that unearned premium refund directly to the lender to pay off the loan. So the value is literally baked right into the policy. It's brilliant.
So this really clever setup doesn't just help the business owner. It actually creates this powerful win-win situation for the insurance agencies, the folks selling the policies, as well.
For the insurance agency, this is huge. Offering financing becomes a whole new way to make money. But more than that, it helps them keep their clients, especially when premiums are going up, which they always seem to be doing, right? It just gives them so much more control and flexibility to stop policies from being canceled. It's a massive tool for keeping customers happy and keeping the business healthy.
And from the business owner's perspective, well, the benefits are just crystal clear. It's all about financial health and stability. They get the insurance coverage they absolutely have to have, but they don't have to drain their bank account or, sell off important assets just to get it.
Okay, so let's bring this full circle, back to where we started with Trulient Credit Union. Why is it such a big deal that a not-for-profit, a member-owned institution is getting into this kind of business?
Well, to really get that, you have to remember the fundamental difference between a bank and a credit union. Banks,
They're for-profit companies. They're owned by investors, and their goal is to make money for those investors. But credit unions are a whole different animal. They're not-for-profit cooperatives, owned by the very people who bank there, their members.
And that one structural difference, it changes everything. It changes the entire mission. Instead of trying to maximize profits for shareholders, a credit union's main goal is to return value back to its members. And they usually do that with things like lower fees, better interest rates, and just a real focus on the community.
And this philosophy is exactly what we're seeing here. When a credit union like Trulient moves into a sophisticated service like premium financing, it's not just about the bottom line. It's about giving its business members better tools, better options to help them succeed.
So Trulient's move really points to a bigger trend, where the lines between different financial services are starting to blur, all in an effort to serve customers better. And it leaves us with this final thought. The next time you look at your own bank or credit union, ask yourself, is this just a place that holds my money, or is it actively looking for new ways to help me and my business grow? Because the game is changing, and the institutions that really nail the answer to that question, those are the ones that are going to win.